Hello, everyone. Welcome to another daily analysis and also a weekly overview. Right now, it's just past 12 o'clock Tuesday morning, and we will do an analysis for Monday, but also for the rest of the week just to see what's coming up. So let's get into it. Today, it's quite a normal Monday. There was no tier 1 data, and everything was just relatively quiet. As usual, that's what happened to the Monday trading session. Over the weekend, there was only two positive news coming up from Japan. There was a trade balance and the flash manufacturing PMI. However, I don't know the impact of that since right now, there was really no people. Basically, in Japan, the very important progress will be their easing policies. And now the central bank, I think last month, was saying that now they are targeting the yield curve of their bond market. So basically, they are still working very hard to boost up the inflation. And basically, that was the really the headline story in Japan right now. Now, if you can see right now, because the US dollar is very strong, the overall market is very risk on sentiment. And that actually put Japanese yen in a not favorable position, but which is good for the Japanese government. Basically, that's exactly what they want. They don't want people to buy their currency. And right now, people are not buying their currency because right now the market was relatively stable. News, everything else was all fine. Other than that, we have several European data came out, all relatively positive from French, German, and Europe itself. The manufacturer PMI and the service PMI. So again, these are all not tier 1 data, but it just gives you an overall sentiment view. Of course, we don't know how much impact that is. We will get to see that in our price action. Now, sentimentally, equity market were mixed. Again, that's very normal Monday morning. There was no clear direction. WTI closed slightly down, but still well supported about 50. Now, the news was that they were still basically working on the last detail for the OPEC meeting. And as mentioned before, this kind of meeting is always lots of rumors. It's gonna coming out throughout the meetings. And OPEC itself has a lot of political issues. So just don't expect too much. Don't put your eggs in this one news. You never know who or when it's gonna drop out at the last minute. So just understand that the whole OPEC meeting, there are many member nations are not in a good term, and that's why it's no surprise. It's very, very hard for this meeting to actually produce any result. So right now, they say they are going to curb the oil production, which is very good for the oil. But again, just watch out for the actual fact. Don't get sucked into by the rumors. Other than that, last Friday, the significant news was the data from Canada, and that was largely negative. So I didn't do any trade last Friday because it was no surprise. But just let you know that, as mentioned, if you want to trade with the oil market in accordance with the currency, you will pick Canadian dollar. But right now, the economic data from Canada itself is just not that good. So you have a positive sentiment from the oil market, but you have a negative fundamental from Canada. So this is not a good situation for me to trade because you have two mixed data coming out, basically an opposite way. So what we want to see is maybe both are negative or both are positive. So right now, either again, we have new positive data, important fundamental data coming out from Canada, or a good comment from Central Bank of Canada, or we have a really negative outcome coming out from OPEC that's gonna suck that's gonna pressure the WTI market below $50 per barrel, then that will provide enough negative sense for me to short Canadian dollar. So again, I understand that in a currency trader, we don't really want to hold our view too strongly, because last week I say I'm looking to long Canadian dollar, but right away, as soon as I see some negative data, then now my perspective has changed. Now I'm really either long or short. They all work for me, but I just want things to go in accordance. I want things to go in the same direction. So you want to trade when a lot of elements and factors are in your favor. That will increase the probability of your trade and will give you a really good setup. So right now, since the CPI data last Friday and the retail sale data are all very negative from Canada. On top of that, I think the last data, I don't remember on top of my mind, but let me just take a look. Last few data were all not that positive either. So now just give me just change the direction of the view. Now I actually think it's probably better to short Canadian dollar, but again, I need negative news coming out from OPEC and oil market. So let's see. Last week, the core CPI, core retail is all quite negative. Core CPI month to month was negative as well. And prior to that, we also have let's see, nothing significant. So last week, I don't see anything here. All right, nevertheless, okay. So let's take a look at what's gonna happen this week. Okay. So Monday was nothing here. We have few members speaks from few central banks, but nothing really significant. Members, what happened to the members is they all have their dovish tone or their hawkish tone. So what you really want to see is the chairman, right? There's a lot of members from Federal Reserve, and really market is not paying too much significance to their comments. It's only if the chairman coming out say something, then that will really affect the market outcome. So in this kind of case, sometimes you have these FOMC members who says that and this. It's not really that important. Same as ECB, you only want to hear comment from Draghi. You only want to hear comment from Yellen. And basically, that's really two most important central banks. Other than that, it's not that important. Really depend on what are they saying? Are they saying something that's really unexpected, or are they really hinting the market? And again, you have to understand there's certain degree and limitation of their talk. For example, right now, SMB market has largely disregarded SMB's chairman, and the reason was because back in 2014 there was a really disastrous event, and that came out precisely because the SMB comment sort of misled the market. And that event actually bankrupted a lot of not only traders, but a lot of brokerage went out of business. So people supposed to follow the central bank's comment, because understand the major role of central bank is to stabilize the market. They're not here to play the game, right? This is not they're not here to make money. They're here to stabilize the market, because currency plays an important role not only for us speculators. It's for a lot of real business. They need that to do import and export. So the central bank's function is to stabilize the market. So their comment has to be very careful. Their comment has to be very honest and very traceable. Like the comment has to be supported. They cannot just say something today to drive the market and tomorrow, doing something completely different. But that was what happened in SMB in 2014. They say that they are going to guard their currency no matter what. And days later, at Sunday, I remember, or Saturday, when market was closed, they suddenly removed the flooring. That means they suddenly stopped intervention. And that's fine. But whenever central banks try to intervene and try to stop the intervention. They always try to warn the market because they don't want people to get hurt. But that was exactly the opposite movement from the SMB. So they had an unexpected removal of the flooring and said, let's stop hedging with the euro dollar. Now what happened is that this SMB, the Swiss franc got back to its strength, and then people are largely buying that. And that caused a lot of people who had a short position on the Swiss franc hurt badly, basically. So that was what happened back in 2014. And ever since that, most traders, people I know or myself, stop following everything that the SMB chairman has said. And of course, that caused a lot of negative effect for the central bank of Switzerland itself, because now they have no other measures. So what you see afterwards is that they actually just start intervention more and more often. Back then, they would try to talk and try to influence the market. But ever since that event, they understand that they had lost their credibilities, and now the only way they can influence the market is really through the actual interventions, and that's what they've been doing. So basically, right now the market really disregard everything that Swiss franc said. Of course, I don't know what he says, but I know it's really always in the line of that the currency is overvalued, things like that. But I just give you a heads up. That's why you shouldn't treat all central banks as equal or all members as equal. It's really depend on, it's all human, right? Depending on their past histories, what had happened, were they following up with their comments, or are they credible to influence the market? So Tuesday today, again, very light data coming out. You have German IFO business climate. That's the only thing in European sessions. And then, of course, consumer confidence, not really a tier 1 data in New York session. Then you have Bank of England, the government currently speaks. Now this might be interesting. I don't expect any market movement too much, but then again, since people are looking forward for any news coming out from Bank of England right now. But right now, again, they are really stuck in this Article 50. They try to still in the court process. So that will be the headline right now from UK. Other than that, really very little that central bank can do. They want to see what happened to the politics first. Right, because these two things are all tied together, right? One influence the money, the economy. The other one influence the politics. So these two things are very tied up one another. And now, since the whole process is still in the court hearing, so we need to wait and see for what happened. And then you have ECB Draghi speaks. Now this might be interesting or not. It's really depending on. So last Friday, the speech was that they are still they don't have any extension for their quantitative easing program. So people were looking for extension for that. Now, what does that mean is that if they extended their monetary easing policy, then that means the euro dollar will continue to be weakened because the central bank will continue to inject money into the market. So that was a sort of a positive news for euro, because they say they don't have an agenda for extension. Now, however, they also say that they also don't have agendas for tapering their easing program. So a couple of weeks ago, there was a rumor coming out saying that they are going to reduce the amount of money they are injecting into the market. And now the president came out and said that was a rumor. So that would become a very negative news for euro. So that's why last week you see a sort of huge up and down swing in the euro dollar in that hours of ECB meetings. So we're looking forward to see what else he's coming out to say. And of course, that will affect the market, because right now really the only thing affect the euro dollar is the central bank comment. Other than that, we don't really have enough or important data that's going to really shift the fundamental view of euro. But that's it, 2 speeches for today. And then we have CPI quarter to quarter coming out from Australia. Now this is important because the RBA is looking out for two data. One is the employment data. The other one is the inflation data. Now the last employment data was very negative. So that's why people will stop buying Aussie dollar. But you see what I'm trying to say? They stopped buying. That means that it was very well supported. So a negative data made market just stop buying. They didn't sell anything. They just stopped buying. But if today's CPI data and the trimming CPI, again, I understand this is the target for RBA. They are looking at trimming CPI. Now, if you ask me the differences, it's just different calculations, but basically it's all inflation data. CPI, trimming CPI or PPI, it's just telling you the same thing out of different data. If these two are negative, then that will affect the outlook for Australian dollar. Now, if these two are in line or slightly positive, then we'll expect to see the buying power resume in Australian dollar. Now, moving to Wednesday, again, not much coming out from European session. You have few retail sale, import price. This is also nothing is important, not tier 1 data. Then moving on to New York, you have flash service PMI. Again, not a tier 1 data. New home sale. These are all good data to look out, but not tradable. Then of course you have crude oil inventory. Now this will be important to see because last time you have a very large drawdown and that boosts the oil market. Now since we are in the environment of OPEC meeting right now, so all this news will play a role in terms of the oil market. But again, if you want to trade oil market, you have to look out what happened from the OPEC meeting, what happened to the market in overall, and then you can trade either directly in oil future or trade Canadian dollar. But the tricky thing about Canadian dollar again is that they are not correlated. They are correlated, but the relationship has weakened. According to my own observation. And the reason is because the fundamental data was really weak coming out from Canada itself. So a lot of people always draw this equation saying that, Canada equal oil market because that's their most important sector. That's not actually the case. The most important sector is real estate. So if their fundamental economics is not doing well, then regardless of how well the oil price is, it's not going to help the country if their fundamental is not doing well. So just understand that you have correlation in terms of currency and their exports and their goods and commodities, but the correlation only works to a certain extent, right? It's not 100%. In everything, I gotta understand, it's not 100%. So, just open up your ears and then really looking out to see what had happened, what's happening to the market at the moment you try to trade. Right? Trade balance from New Zealand. This is again not tier 1 data, but important to look out. Moving to Thursday. Again, not important thing coming out from Europe. Now, of course, 4:30 we do have preliminary GDP. This is important from UK. And again, any data coming out from UK right now, we are looking for negative deviation. Reason is that you have a lot more probability in your side if you are selling British pound. Now, we need a flash negative data for us to get into the market. And that's pretty much what every other trader is waiting for. It's waiting for a flash piece of data that gives us enough reason to continue shorting British pound. And the GDP might be a good indicator to do that. But we will see when we're moving on to Thursday. And moving to New York session, you have unemployment claim. Again, not that important because it's coming out every Friday. Now, core durable goods, it's again a worthwhile data to take a look. It's not a tradable data for me personally. Pending home sales, and then of course you have several data coming out from Japan. and then another inflation data coming out from Australia. Now moving on to Friday, you have a core CPI from Japan. Now of course this will be important since CPI is what Japan is trying to boost. They were trying to boost their inflation target. So take a look at this. If this coming out as negative deviation, again, that's gonna shadow a lot of negativity for their central bank policy, because the market has already doubt whether their monetary policy worked or not. They have been doing this easing for years, and then their currency is still largely deflated, devaluated. So the market is really doubtful for their policies, and that's why they have to have a new trick coming out, and that's why you hear that they are now targeting the yield curve. But again, a lot of economics coming out saying that there's a certain extent for that. You can create a lot of headline, but the deep fundamental way to boost economy is limited. And again, and also understand the economy is a very new science, basically, right? It only happened really after, World War I, World War II, and then you have these different economic scholars or economic parties and theories. So it's just very new theories, and people, a lot of thing that central banks are doing right now, completely new. It had never been done before. It's only on paper as a theory. So a lot of things are very experimental right now, and that's why people are always very doubtful for all these new tricks from central bank to see whether it works on paper, it works on theory, but are they really gonna work on the whole economy? And then that's why it gets people worried, because this is people's money, right? This is people's lives. So it's not something you can just play around, and that's why sometimes that's give them a headache to see if they really, their hands are tied, basically, for Japan right now. They try all they had tried, and then yet the inflation is still very low. But of course, that's another story. I do think they really have a different, not only the economic perspective, they have a different culture perspective, and that's why same thing works so well in the US did not work well in Japan. And that's the fundamental culture differences. If you've been to Japan, if you're from Asia, then you'll know that precisely the reason, I think, is really lies down to the cultural part. Because if you inject money to the US, people will really follow the theory of the economic system. More money means we can spend more, we should borrow more because everything is cheap. But that's really not the way how the Asian culture works, and that's why the inflation is still very low in Japan. But that's another story. If you're interested, we can talk more about that. And moving on to another Spanish flash PMI CPI. These are not important data. Then, of course, 8:30 you have advanced GDP. Now, this is important because advanced GDP is, if I remember correctly, it's the first GDP data. You have advanced, you have interim, and maybe you have final GDP. So I think this is the first one. Amounts apart, advanced, preliminary, and final. Yeah. So advanced is the earliest, have the most impact, right? So see, Forex Factory is a great website. I mean, when you first started, you could really, don't just look at the data, click it and understand what it's about. This is what you learn economy online for free. It's really just a lot of wealth information you can learn. So advanced, because it's the first one, so it's highly anticipated. It will actually provide a lot of volume to trade. So this is a tradable event for Friday, and I will give out more information throughout the day because this Friday is still a couple days away. But basically, that's it. And then they have daylight saving. Just remember to change your time zone. So that's all for this week. Quite, not really a lot of tradable events. So just watch out for the news and see if any new updates from OPEC, new updates from any market. And news-wise, right now, really the major headline, I would say, is still the US election. It is coming very, very soon, and now that is going to affect the market. Of course, right now the US dollar is very, very well supported, and the probability for Hillary Clinton to get elected is also very high. So right now it seems like the world is great, happy again. But again, in this kind of events, watch out for any surprise, because that will be the chance for you to make some money. But other than that, let's get into our chart analysis. So first thing first, take a look at our current position, Euro Aussie. So we are still in this trade, and right now, as I mentioned, this is a good thing because now we're in the range bound. Now, however, this trade has already been risk-free, right? Because we already moved our stop loss. Now, the only reason, the only risk factor right now is the Australian CPI data. So, of course, if the CPI data was negative this week, if it's negative, it's going to affect the position for Australian dollar. Now, whether it's going to affect too much compared to euro, not really, because the euro dollar is still way much weaker than Australian dollar. However, it will affect the position. So I am going to tighten my stop loss again. Now we are today 1, 2, 3, 4, 5, and this green candle and this candle, this is pretty good, nice support above here. So this will be good area 1.4428 or 38, 1.4438. Around here will be a good place to put your stop loss, basically at the last swing, and then we'll see what happened to this trade. Okay, now other than that, let's take a look at our 28 currencies, 28 pairs. So Euro Pound, again, we are in a range market. As usual, that's what happened on Monday morning. So Euro dollar, as you can tell, we are keep dropping, keep breaking down a new low, and then right now, we're really looking. We might have some range bound, some reverse effect, but rebound, but really looking downward. Again, of course, the US election might change the outcome, but you just have to be careful. Euro CAD, again, a range bound. We do have a slight negative tone in Canadian dollar due to their own fundamental data, and also negative news coming from OPEC meeting today. But other than that, really Monday, nothing too significant for us to trade. Moving on to British pound. Again, you look at that, it's all in a range area, and that's why I say we are. Remember, we have several positive news coming out from UK last week. We are still in a range bound. You gotta understand, it market has already tell you no one is looking forward to buy British pound. However, there's no reason for us to sell because we need a new flash data. And if it's nothing happen, this is what happened. Range bound right here, another range bound in this area. Now, don't get lazy or like lay back saying, oh, nothing's gonna happen. No, this is basically the storm, right? This is a peaceful moment before the storm. People are looking for that one piece of negative news or data for us to continue short this thing. Swiss franc and yen, again, we're in a ranging area. Dollar Swiss franc. Now, today, again, nothing really significant happens. Dollar yen, again, nothing worthwhile on our radar. Aussie Swiss, Aussie dollar, Aussie CAD. And Aussie CAD is interesting just because you have this, now it's already working already. But if you look at that, and then, back then when I was trading just with fundamental, just with, technical, this will be a good entry. I'll be like, oh wow, this is a reversal signal. We are at a good resistance. Let's short it. But what happened is you completely trade this way, you completely disregard the fundamental side of the currency. Because if you're shorting it, what are you trying to do? You're trying to sell Australian dollar and buy Canadian dollar. But as mentioned, Canadian dollar is in a weak spot right now. So why would you, and Australian dollar, although had some negative sentiment, it's in a better position than Canadian dollar. So why would you go against the fundamental and the sentimental? Well, that's really the downside if you only trade technical analysis. And back then, I would get very frustrated because I would get filled because I would use stop order. I get filled, and now I'm almost get stop out because my stop loss will be here. So this will get me very frustrated back then. But now, with the new piece of knowledge, really, broaden your horizon, and really, that's really how the big money is trading. That's how the hedge fund is trading. That's how the institutional trader is trading. So, the more knowledge you have, you don't have to trade that way, but the more knowledge you have, it's really gonna work for your age, your trading abilities. Also, ASEAN, again, nothing happened today. Cash Swiss is interesting because this is again a very good reversal signal, and Canadian dollar is better than the Swiss franc for sure. Now, whether this is a good enough pair for me to enter, not really, just because I don't want to long Canadian dollar right now if they don't have anything good coming out from their market. So that's why I want to buy that strongest currency, or I want something that is really have a good favorable positions. Now, of course, if you say that Canadian dollar is still going to be positively support compared to Swiss franc, I do agree with you. But in terms of this price action itself, I just don't like it, because if you're looking at this candle and you're looking at your upside, it's really not too far until you reach quite few resistance. So for me, it's just not that attractive for me to get into this kind of daily trade. Again, my goal in daily trade is not the volume. It's really to pick something that is good and that's gonna run for a long time. Right? So a lot of patience is necessary to do this kind of trade. So right now, I don't really think this is something that's attractive for me to get into a Cash Swiss. Okay, yeah, of course, by all means, you can do it if that's on your radar. There's nothing wrong to long this pair, because fundamentally, yes, Canadian dollar is doing better than Swiss franc. Sentimentally, yes, the oil market is supported. They could, provide a lot of upside if that's that's what you have in mind. So Cayenne, nothing happened here. New Zealand Swiss, again, it's really oh, what happened? New Zealand dollar again, New Zealand cat, and New Zealand yen. Yep, basically that's it. Nothing really on my radar at this point. So the only thing for you that you might be interesting will be man, I think I lost the connection. Okay, Cash Swiss here. So this, oh man, I apologize for it. I had problem with the my internet connection, but also a problem with the server of the Untitled brokers. There's just a lot of issues lately. But if you are interested to do this, you see, for me, it's really just it's not even a good position to long, right? It's not low enough. And it's, first of all, people might argue, say, hey, but in your other Euro Aussie position, you didn't get in at the highest high for short. Yes, but I know the fundamental is very strong on my side. Now, cash Swiss, I'm not so confident for the fundamental of Canadian dollar. I'm also not confident for the oil market, especially the OPEC meeting right now. It's really, the result is coming out soon, and that's gonna affect the market. So if I'm not confident in fundamental and sentimental, I can still get into a trade, but then I want the price action to be in a very good position. And now I'm not even in a good position right now. I'm just in this range bound. Right? In range bound, for me, the upside is really maybe 0.76. Right? And for me, that's just not a good risk reward trade for me personally to enter in this kind of daily environment. So, but if you want to do it, you feel free. You can put the order here, put your stop loss maybe at 0.35 here, 0.3550, right? Your stop loss can be here, your entry can be here, and then see if you can break above 0.76. You might be able, if you might be able to do that, then you are moving forward to 0.7750. If not, then just tighten your stop as soon as possible. Okay, for those of you who are interested to enter this one. Other than that, that will be all for me today. And again, I know it's not much, but it's just a very safe way to trade in this kind of daily environment. And if you want to get a little bit excited, a lot of people say, hey, it's kind of boring to trade this way. There's nothing happening. Yeah. So you want to get excited, you can always trade a fundamental. You can always trade a news release. That's one of my strategy, and I'll give you more excitement. Of course, in trading nowadays, I am not looking for excitement. Right? If you want to looking for excitement, do something else. Go play bungee jump or something. As a trader, our only job and only goal is to make money with limited risk. That's it. We are not here to looking for any emotional fulfillment. You're here to increase your probability of profit and limited your downside risk. That's the goal and the statement for your trading career. So don't get sucked into this kind of wild market, Wolf of Wall Street, and people are like, oh, it's fun, it's gonna be cool. No, it's not. Real trading, it's very boring, it's very stable, it's very systematic, because essentially you want to be stable and you want this thing to provide you with a very stable income. So again, that's it for you today. And for those of you interested to long cash Swiss, you are feel free to do so. Again, my call will be getting at the breakout. So 0.7490 or 75, or even 7510, just to see if this thing can hit that high. And a stop loss can be at 0.7350. Now, of course, my stop loss for me is always a safe factor, right? I'm not really going to let the trade go against me that long. So for me, I might, if I were you, really say, oh, I want to have something to trade. Then, yep, you can, put your stop order at stop order at 0.7510. Put your stop loss at 0.7550. Okay, and your target is no target, basically, because for me, basically, I tighten up my stop loss. But you can put something aiming forward for here, right? Now, this is how I trade. Basically, I tighten my stop loss, and that let my trade keep running. So essentially, I'm always looking for more than one-on-one, right? But I don't want to reduce my profit, but I always limited my risk. So that's how I trade. And again, if you have any question, comment, feel free to let me know. Other than that, I'll come back tomorrow and do another daily analysis. Happy trading, and thank you for watching. Bye-bye.